contractor has an HVAC unit damaged on the way to a job site. The contractor assumes the builder's risk policy covers it. The builder's risk carrier says, nope, it wasn't installed yet. Meanwhile, nobody set up inland marine coverage. So now everybody's arguing while thousands of dollars are sitting in limbo. And the crazy part is this happens all the time because most contractors don't actually understand where builder's risk stops and inland marine begins. And honestly, part of the reason this gets confusing is because builder's risk is technically a form of inland marine coverage to begin with. So these policies overlap just enough to create some really dangerous misunderstandings. And usually those misunderstandings don't show up until something gets stolen, damaged in transit, catches fire, gets hit with water damage, or disappears out of temporary storage halfway through a project. And when that happens, suddenly everybody's pointing fingers at each other, trying to figure out whose policy was actually supposed to respond. In this video, I'll show you how to tell whether a construction exposure belongs under builder's risk or inland marine, where contractors accidentally create expensive coverage gaps during transit installation, and the simple framework you can use to figure out what policy should respond before a claim ever happens. But before we get into the difference between builder's risk and inland marine, you need to understand why construction projects completely break the normal rules of property insurance. Think about a finished office building. If it burns down today, the insurance company has a pretty good idea what they're insuring. It's a completed structure. The value is relatively stable. The risk is predictable. But a building under construction is like trying to insure a moving target. On day one, it's just dirt. Then a week later, there's excavation work. Then concrete, then framing, then electrical, HVAC, roofing, and finishes. And every single week, the value changes. The risk changes. Even what physically exists changes. And meanwhile, there are tools moving between job sites, materials sitting in temporary storage, equipment being rented, subcontractors transporting property they don't own yet, and expensive items waiting to be installed. That's why contractors get confused about builder's risk versus inland marine. Because the question isn't just what got damaged. The real question is, was this part of the project itself? Or was this mobile property surrounding the project? Now, this is where the naming gets to starts to get weird because most people hear the term inland marine and immediately think about boats or cargo ships. But inland marine insurance really exists to cover property that moves around instead of staying in one fixed place. That's the important idea. Traditional property insurance works really well for fixed things, buildings, contents, warehouses, stuff that mostly stays where it is. But contractors don't operate in a fixed environment. Their tools move, their equipment moves, materials move. Inland marine insurance really exists to cover property that moves around instead of staying in one fixed place. That's the important idea. Traditional property insurance works really well for fixed things like buildings, office contents, warehouses, stuff that mostly stays where it is. But contractors, they don't work in a fixed environment. Their tools move, their equipment moves, and their materials move from place to place, and their projects evolve. Things, they'll sit in temporary storage for a while, and subcontractors will transport materials from one job site to another. And because of that, construction creates all these moving property exposures that normal property insurance policies just don't handle very well. So that's where inland marine comes in. And once you understand that, a lot of these policies start making more sense. For example, some of the most common inland marine coverages contractors carry are things like contractor tools and equipment coverage, installation floaters, equipment moving between job sites or materials in transit, or maybe it's in temporary storage. Another one is borrowed or rented equipment. But it's all stuff that's constantly changing locations. Now, here's the part that throws people off. Builder's risk is technically a type of inland marine coverage, and the reason for that is pretty simple. Buildings under construction don't behave like normal buildings. A normal building assumes you're insuring a completed structure with a relatively stable value. But construction projects don't work that way. Think about a brand new construction project. At the beginning, there's basically nothing there, maybe just a plot of dirt. Then the dozers come in, they start grading and moving it around, and then they'll pour concrete in for the basement, and then they'll start framing, And then once the framing's done, then the mechanicals start to come in, and piece by piece, the building becomes more valuable throughout the project. When it's just dirt, there's almost nothing to rebuild. But once there's framing and electrical work and plumbing, roofing, and finishes in place, now the cost to rebuild that partially completed structure becomes significant. And that's one of the core reasons builder's risk exists. It was specifically designed for structures whose value changes throughout construction. It also recognizes something that's really important. A building under construction is incomplete and vulnerable in ways that finished buildings are not. There are exposed materials or open walls or temporary systems. And there's constantly changing trades and higher theft exposure and weather exposure and water damage exposure and all these things that don't exist the same way once the building is finished. Now, here's an important nuance that contractors need to understand because this is where people can get themselves in trouble. There is no single standard builder's risk policy. Different companies handle transit, temporary storage, testing, occupancy, soft cost, delay coverage, all of that differently. So, while we're going to simplify this into a practical framework in this video, you still have to read the actual policy and understand how it's written because two builders' risk policies can look very similar on the surface and behave very differently during a claim. And this is exactly where contractors can accidentally create coverage gaps because there's this gray area that exists before something becomes a permanent part of the structure. A good way to think about it is this. Until materials become a permanent part of the building, they're usually better thought of as inland marine exposures. Once they become part of the structure itself, that's when builder's risk typically takes over. Now, that's not a perfect rule. There are builder's risk policies that extend broader than people realize. Some will cover certain materials in transit, and some will cover temporary storage. Some extend to a temporary structure or equipment waiting to be installed. But as a general mental shortcut, this framework works really well. Let's go back to the HVAC example. If the HVAC unit is sitting in a warehouse waiting to be delivered, that's usually an inland marine or installation floater exposure. If it's being transported on a truck to the job site, still in the marine. If it's temporarily stored at the job site before installation, often still in the marine, depending on the policy structure. But once that unit gets installed and becomes a permanent part of the building, now it starts behaving more like a builder's risk exposure because it's become part of the project itself. And this is why installation floaters exist. An installation floater is designed to follow materials through all these in-between stages, from the supplier to transit to temporary storage to installation, and often until final sign-off or completion. That's really important for subcontractors, especially because a lot of subcontractors are responsible for materials long before those materials officially become part of the building. So, if you're an electrical contractor transporting switchgear, or a plumbing contractor bringing fixtures to a site, or an HVAC contractor moving rooftop units, you may have responsibility for those materials while they're moving around, sitting in storage, or waiting to be installed. And builder's risk may not be the best policy to respond there. This is also where contractors get burned by assumptions. Cabinets can get stolen out of temporary storage before installation, roofing materials damaged by water before they're installed, electrical equipment damaged in transit, owner furnished materials being transported by a subcontractor. All of these situations can land in gray areas if nobody clearly thought through who was responsible for the property before it became part of the completed structure. But there's another category contractors confuse with builder's risk all the time: tools and equipment. Because builder's risk is not really designed to cover the day-to-day mobile business property contractors use to operate. Things like skid steers or lifts, compressors or laser levels or hand tools or rented excavators or generators. That stuff usually falls under contractors' equipment coverage, which is another form of inland marine insurance. And the important distinction here is this coverage follows the contractor's equipment wherever it goes. Job sites, transit, temporary storage, different projects, and depending on the policy, it may cover owned equipment, leased equipment, borrowed equipment, or rented equipment too. This is one of the most common misunderstandings I see. A contractor can think, Well, the equipment was on the project, so the builder's risk should cover it. But the builder's risk is usually focused on the project itself, the structure, or the permanent work, the construction value being added to the project, not necessarily the contractor's mobile business property that happens to be sitting there. And honestly, this is probably the simplest way to separate these two ideas in your head. Builder's risk is usually project centric, inland marine is usually contractor centric and mobility centric. And now we get into one of the biggest blind spots with builders' risk policies: when coverage actually starts and when it quietly stops. One of the most dangerous things about builders' risk coverage is that contractors tend to think about it as job site coverage, but builders' risk policies are extremely sensitive to timing. In other words, when does coverage officially begin and when does it officially end? Because the answer is not always as obvious as people think. Some builders' risk policies begin when construction contracts are signed, and some begin when work physically starts. Some begin when materials are first delivered to the site. And then on the other side, coverage can end in a bunch of different ways too. It may end when the project is complete, or it may end when the policy expires. It may end when the building becomes occupied, or when it's put to its intended use. And so this is a place where projects can quietly drift into dangerous territory without anyone realizing it, especially on larger projects. Let's say you've got a phased renovation project. Maybe one section of the building is already occupied while another section is still under construction. Or maybe apartment units are being turned over one floor at a time. Or maybe a commercial tenant starts operating inside the building before the entire project is finished. A contractor may think, well, we're still working on the project, so obviously the builder's risk policy is still covering everything. But the carrier may view portions of that building as operational property now instead of a structure under construction. And if nobody planned for that transition correctly, you can wind up with gaps that nobody notices until there's a loss. Some policies will solve this with permission to occupy extensions, and some don't. Some policies handle phased handovers really well. Others are much more restrictive. And this is why the bigger and more complicated the project gets, the more important it becomes to think through how coverage transitions from construction coverage into permanent operational property coverage. Because construction projects don't always end cleanly. A lot of them evolve in stages. Now, at this point, you might be thinking, okay, this still sounds kind of messy. And honestly, sometimes it is. But there's a really simple framework that makes most of this much easier to think about. Think about construction exposures in three buckets. Bucket number one is project centric exposures. That's usually builder's risk territory. The unfinished structure, permanent materials, temporary works tied directly to the project. Sometimes soft costs and delay related exposures, depending on the coverage form. Basically, things connected directly to the value of the project itself. Bucket number two is contractor centric exposures. That's usually inland marine territory. So, tools, equipment, mobile business property, borrowed equipment, rented gear, stuff the contractor owns, uses, transports, or moves between job sites. And then bucket number three is materials in motion. That's where installation floaters and inland marine coverages become really important. Materials in transit, temporary storage, property waiting to be installed, materials the contractor is responsible for before final sign off. And once you start thinking about those three buckets about in construction risks, these policies can be a lot easier to sort out. So, for example, let's say a plumbing contractor is transporting owner furnished fixtures to a project. One gets stolen out of the truck overnight. A lot of contractors immediately assume, well, it's for the project, so builder's risk should handle it. But at that moment, it's still property in motion. It hasn't become part of the building yet. It's still under the contractor's control during transit and storage, which means that exposure often fits much more naturally under inland marine or in an installation floater than under builder's risk. And honestly, a lot of these coverage problems don't happen because somebody bought the wrong policy. They happen because the contract requirements were misunderstood from the beginning. Because construction contracts are full of little insurance landmines around builders' risk responsibilities, additional insured wording, waiver requirements, installation responsibilities, and who's actually supposed to insure what during the project. And if you don't catch those early, you can create gaps before the job even starts. So, if you want to understand how to read construction contract insurance requirements in plain English and avoid getting blindsided halfway through a project, click right here and watch this video on meeting 2026 contract requirements for new projects and avoiding surprises.